The average funeral home in America generates around $1 million a year in revenue, and the average net profit margin sits at roughly 10%, historically closer to 14%. That sounds steady, dependable, recession-proof, because it genuinely is. You want to start one? Buy a quiet building on a tree-lined street, hang a dignified sign out front, and provide a service that, unlike almost everything else in this series, will never run out of customers. That's the fantasy, and on paper, the numbers back it up. And yet, opening one from the ground up can require anywhere from $400,000 to $2.5 million in startup capital, and the industry is quietly being reshaped by a single trend that's making the traditional version of this business worth less every single year. That is the economics of the funeral home business. And by the end of this video, you are going to understand exactly why. When you open a funeral home, you are not opening a single service business. You are opening a facility that operates as three businesses stacked on top of each other. A licensed embalming and preparation operation, regulated closely enough that it sits legally adjacent to a medical facility. A merchandise retailer selling caskets, urns, and memorial products at some of the highest markups in American retail. And a hospitality and event venue, hosting visitations and services for families on what is, for them, the single worst day of the process. Every one of those three businesses has its own licensing requirements, its own regulatory body, and its own way of losing you money if you get it wrong. And unlike a restaurant or a retail store, your customer almost never comparison shops the way they would for anything else they spend this much money on. They are grieving, they are making decisions quickly, and the entire pricing structure of this industry has been built around that reality for over a century. Here is where the range is enormous, because funeral home covers businesses that look nothing alike on a balance sheet. At the lower end, acquiring an existing small funeral home, buildings, equipment, and an established client base already in place can start around $200,000, though the purchase price climbs quickly with reputation and location. Building a modest, single-chapel funeral home from the ground up typically requires startup capital between $430,000 and $1.4 million, covering property, embalming and refrigeration equipment, initial casket and urn inventory, licensing, and a vehicle fleet. A full-scale, ground-up traditional funeral home with a proper chapel, viewing rooms, and a complete facility build typically lands between $750,000 and $2.5 million, driven almost entirely by two line items: the property itself, which alone can run from $250,000 to over $1 million, and specialized equipment like embalming tables and refrigeration units, which add another $50,000 to $200,000 on top. And here's the part that catches almost every first-time owner off guard. None of those numbers include your working capital buffer, because break-even in this industry commonly takes 12 to 24 months to reach. Some financial models budget a cash reserve of several $100,000 on top of the build cost, just to keep the doors open and payroll met while the client base slowly builds. The purchase price is not the finish line. It's the entry fee to a runway that can last 2 full years before the business supports itself. So you've built your chapel, hired your staff, and technically, you are now a funeral homeowner. Congratulations. Before your first family walks through the door, you have a set of problems that a normal small business simply does not have. The first problem is licensing, and it runs deeper than almost any other business in this series. Embalming and funeral directing require individually licensed professionals in most jurisdictions, not just a business license for the facility itself. You cannot simply hire willing staff. You need people who have completed mortuary science programs and passed state board exams, and in many markets, those licensed professionals are in short supply. The second problem is regulated facility requirements. Preparation rooms, refrigeration units, and viewing spaces are subject to health and safety inspections that go well beyond what a typical commercial building needs, and renovating an existing property to meet those standards is a common and often underestimated cost, frequently landing in the range of $75,000 or more just for the prep and viewing room build-out alone. The third problem is inventory that customers hate shopping for. Caskets and urns carry gross margins of 50 to 60%, some of the richest markups in retail, precisely because almost nobody negotiates hard while planning a funeral. But that same dynamic has become the industry's biggest vulnerability, because as soon as a grieving family has time and internet access to compare prices later, or chooses cremation instead, that entire high-margin category can disappear from the sale altogether. The fourth problem is around-the-clock obligation. Death does not happen during business hours. A funeral home effectively commits to being available every single day of the year, which shapes staffing costs and owner lifestyle in a way few other businesses require. Let's say you've solved the big problems: licensed staff hired, facility built out, inventory stocked. Now let's talk about what it costs every month, regardless of how many services you host. Monthly operating costs for an established funeral home commonly run between $20,000 and $60,000, covering payroll, facility overhead, vehicle maintenance, and ongoing licensing and insurance costs. Payroll alone is typically the largest single line item because, unlike a retail store, you can't run a funeral home with minimum wage part-time staff. Every embalmer and funeral director on your payroll represents years of specialized training and a state license you're paying to retain. And this is the part that quietly sinks new owners. Your costs are largely fixed and immediate from day one, while your break-even timeline is measured in years, not months. A business that needs 18 to 24 months to reach sustainable client volume, while carrying 5 and 6 figures in monthly fixed costs the entire time, requires a level of capital patience that catches undercapitalized owners completely off guard. Here is where the funeral home business gets genuinely interesting, because the single biggest force reshaping this industry isn't a new competitor or a change in regulation. It's a shift in what families are choosing to do with their loved ones. Cremation rates have been climbing steadily for years, and every family that chooses cremation instead of traditional burial is a family that, historically, skipped the highest margin part of the entire business: the 50 to 60% markup casket, the embalming service, the elaborate viewing setup. Direct cremation packages are simpler, cheaper for the family, and dramatically less profitable for the funeral home under the old business model. Here's the number that changes everything. A funeral home built entirely around traditional burial economics is watching its highest margin category shrink every single year, regardless of how well it's run. The funeral homes actually growing their profitability aren't fighting that trend, they're rebuilding around it. Modern packages increasingly bundle cremation with memorialization services, urns, keepsake products, digital legacy storage, even grief counseling subscriptions, rebuilding margin on services that didn't exist in this industry a generation ago, rather than defending a casket sale that fewer families want to make. The owner who understands this treats cremation not as a threat to fight, but as the new baseline to build a completely different, higher service, subscription-adjacent revenue model on top of. There are really two types of people who end up owning funeral homes, and their businesses look almost nothing alike 5 years in. The first is the traditionalist, someone who bought or inherited a funeral home built on the old model: casket sales, embalming, full-service burial, and largely kept running it the way it's always been run. This owner benefits from deep community trust and multi-generational family relationships, often the single biggest asset in this entire industry, but is fighting a slow structural decline in their highest margin revenue category with every passing year. The second is the modernizer, someone who actively rebuilds the service menu around where the industry is actually heading: cremation packages, pre-need planning, memorialization products, digital and subscription-style offerings layered on top of the core service. This owner is betting on adaptation over legacy, trading some of the traditionalists' built-in community trust for a business model that isn't shrinking underneath them. Let's run the numbers on a mid-sized single-chapel funeral home, built for $1 million in startup capital. The optimistic scenario: the business reaches sustainable client volume within 18 months, generating $1 million a year in revenue with a healthy service mix, still meaningfully weighted toward traditional burial, thanks to strong community ties. At a 12% net margin, above the industry average thanks to efficient operations, you're netting around $120,000 a year. At that pace, you recoup your $1 million investment in a little over 8 years. The realistic scenario: the local cremation rate keeps climbing as it has nationally for years, and your traditional burial mix shrinks from 60% of services to under 40% within 5 years. Revenue holds roughly flat because you've priced cremation packages competitively, but your margin compresses from 12% down to 7%, since you've lost the highest margin casket and embalming revenue on a growing share of your business, and you haven't yet rebuilt the memorialization and subscription-style offerings to replace it. Annual profit drops to around $60,000, and your payback period stretches from 8 years towards 16. The difference between those two outcomes isn't your building or your reputation. It's whether you rebuild your revenue model around where cremation is taking the industry before that shift finishes eating your margin instead of after. Owning a funeral home is, in one sense, exactly what the fantasy promises: a genuinely recession-proof business with demand that will never disappear. But it is also 3 separate regulated businesses wearing one dignified building, built on a merchandise margin model that a decades-long shift toward cremation is quietly eroding every single year. The $400,000 single chapel build and the $2.5 million full-scale facility are the same business wearing different clothes. A bet that families will keep trusting you with the worst day of their lives, and that you'll have rebuilt your revenue model before the traditional one it was built on shrinks out from under you. For the owner who treats community trust and evolving service offerings as the real product, not the casket markup, a funeral home can be one of the most durable small businesses in America. For the owner who assumes the old model runs forever because death always will, it's an expensive way to discover that the customers were never going anywhere. The revenue model just had to keep up with how they wanted to be remembered.